Here is my November 2025 question. Hi, I saw your article from October 2025 regarding handling a property through a divorce. I have a special circumstance and I need to ask how you would handle this. I am going through a divorce and my ex and I are getting the property 50-50. He doesn't want it, so he wants to sell it to me, but I don't have enough money to buy him out. Have you seen this and how would this be handled? This is a scenario that we did not touch on last month in our October 2025 Q&A, but it is rather common. Due to the divorce, one spouse, party A, is purchasing the other spouse, party B's interest. But if party A doesn't have sufficient funds, getting a new loan to finance that purchase is their best bet. In this scenario, the transaction can be handled two ways. And it is important that one, party A talk to the loan person at the beginning as to which way is acceptable to the lender. And two, both party A and party B talk to their financial counsel because there may be possible income tax issues and they may need paperwork for income tax purposes. Hopefully, both 1 and 2 coincide. First way, do a refinance transaction only. Now, this is a simple and less costly way. Party A is the borrower and would qualify for a loan at whatever amount they need to pay party B in escrow. Party B completes a confidential statement of information because he is a current owner and he needs to be vetted. And he will also sign an amendment from escrow that would reflect the payment to him in return for signing a quitclaim deed, relinquishing his ownership. Party B is not a seller, so there is no need for any other paperwork that is normal to a seller. However, there would also be no escrow closing statement for Party B for his income tax purposes. Party A will get a closing statement to show her payoff of Party B for her income tax purposes. The second way is to do a purchase-sale transaction for 50% of the interest. Now, this will involve more work to all the parties, and it is more costly. But it is the way our escrow industry CPAs recommend. The buyer in this transaction is party A, and the seller is party B. The purchase price is the agreed upon value of the 50% interest, and party A would get a loan for the amount that they need for this sale price. As the seller, party B is a part of the transaction, and he would need to sign all necessary escrow paperwork, including the grant deed for his interest in the property. Both parties would get their own final closing statements for income tax purposes. The transaction is handled just like a standard purchase and sale transaction, with one exception. Because this is a divorce situation, Party B seller would not need to provide a California 593 withholding certificate, nor a Federal Foreign Investment in Real Property Act, a FRPTA form. Also, escrow will not need to file a 1099 to the IRS. All this being said, both parties will need to confirm this exception with their financial counsel, and we would mention that specifically in our escrow instructions. Again, the second way is the preferred way, but either scenario deserves to be fully explored between the parties, the lender, and the escrow to make sure it works in their particular circumstances. When there is a divorce and a separation of real property assets, financial and/or CPA counsel becomes very important and should be considered even before the divorce settlement agreement is signed. The most important differences between these two types of transactions is as follows. As a refinance transaction, there's no escrow cost to the party who is being bought out, but he or she will not get a final closing statement. In a purchase sale transaction, there will be costs to both parties, a buyer and a seller, but a separate closing statement will be issued to each party to show the costs. Clients must confirm with their financial counsel what type of transaction they want. Thank you. This is Juliana 2 of Viva Escrow. Check out my escrow briefs on my site, juliana2.com.